Everybody, it's Megan with Sidekick Accounting and your accounting sidekick. And I wanted to bring today the third video in our series of Out of the Box Accounting. And just to reiterate, accounting is something that a lot of people have a hard time digesting and understanding and relating to because it's numbers and it's business and it's things that sometimes people feel like they're unqualified to understand. And so I wanted to create this series of videos just kind of talking about out of the box thinking and how it can be very much more relatable to you as an individual, regardless of what your background is. So day 3 or video 3 of our series, we are going to talk about starting banking relationships. So this is a question that comes up often when people are looking to get funding, right? We talk about having a banker and having a business bank account when it comes to keeping your receipts and your money organized, which is very important. So if you have a business or a side gig or anything like that, where it's outside of your employment, your W-2 job, anything like that, unless it's from your business. But if there's like something else that you do and then you have the side business that you do, you still want to make sure that you have a business bank account or a bank account that's separate from your general personal account. It's really important to make sure that you do that. It's something that's reiterated often. All of us accountants, I think, can attest to the fact that this is super important for you to do as like a first step in starting a business or a side gig, even if you're operating as a solopreneur or a sole proprietorship. You want to make sure that you're using like an account that has a DBA attached to it or something to that extent, regardless of how your business is structured or how big it is or how little it is. It's good to keep it as separate as possible. Okay, so that is not what we were talking about today, but I do want to stress the importance of that. If you have not done it already, make sure you get a separate account for all of your business activities. But in addition to that, it can be really important, especially depending on your business and where you're hoping it to go and grow to have that conversation with a banker about you. Introduce yourself, have the conversation, go out to coffee. You, first of all, never know how relationships are going to come back to you when it comes to growing your business in the small business world and small business community. It's really important to make connections. Because even if they don't benefit you right now, today, you never know where that connection can grow into. But specific to banking relationships with your banker, it can be really important because as part of the loan process, they're going to be looking at a few things. So generally, they're going to be looking at previous year taxes. They're going to be looking at your business plan. They're going to be looking at projections. And then they're going to be looking at you as the owner. And I know it kind of makes it seem like that's not the case, but it is. And so having a relationship started with a banker can be really important to your loan process down the line, even if you don't need it now, even if you're just starting up or you just have a business concept, it can be really impactful to start that banking relationship before you need it. And a lot of times that comes with credit and, debt or what am I trying to say, financing options as well, is you generally want to start having that conversation or start looking at it, especially with like credit lines. So if your business is something that needs a credit line for, it can be really beneficial to start having that conversation ahead of when you might actually need it down the road, because it can be really hard to get credit when you need it, but it can usually be a lot easier beforehand. So having that plan and process in place can be really helpful. Having a relationship with a banker can be really beneficial because they can help you with that process. They can give you some insight as to when you should start having this conversation and what you need to ask for and what you need to start preparing for. So even if your credit isn't the greatest, or you don't have that nest egg, or you aren't sure about your business plan, having those conversations can start getting these pieces into place that you're going to need for credit down the line. Now, how does this impact your accounting? For one, you want to make sure that you have money to operate your business. So we talked a little bit about working capital and the need for that, especially when you're transitioning into different phases of your business. And that's pretty much the same conversation that we would have today about the business credit side of things as well. Is you want to make sure that you are planning for these different things that happen. And when it comes to business credit, having something that happen like a transition in your business can be really beneficial to having that credit and that financing as part of your plan to grow your business. So it's good to have good debt. There's say is one thing as well. So there's a difference between good and bad debt. Credit cards, unless you're paying them off every month, are generally bad credit products because you're usually going to be paying a lot more in interest. Credit lines can be really big and good for you in places like Square and Shopify and PayPal have different lines of credit. However, you really want to make sure you're examining what the terms are and how much interest you're going to be paying. So because having it through a different lender, a more traditional lender like a bank might actually give you a better credit amount. Plus some of the loans like through Square and Shopify, they're going to be pulling money frequently. So it's going to be like every week or every sale or whatever it might be, which can dip into your cash flow. And where, having a traditional loan or line of credit can be easier because there'll be less of a payment once a month, kind of a thing. So there's a lot of things to consider when it comes to products and for your business. But that's where having that banking relationship started ahead of time can really be helpful. And it impacts your accounting because you got to have cash flow in order to operate your business. As much as you got to have profitability, you really have to have both. You got to be positive profit and positive cash flow in order to have a successful, healthy running business. So it's important to understand both of those concepts because they're different. Your cash flow is impacted by any type of money coming in and any type of money going out, where your profitability is just sales and expenses, your income and expenses over that period of time. But there's accounts receivable and accounts payable and loans and loan payments and all those things that can impact your cash flow where it doesn't necessarily impact your profitability. So having that understanding is really important. But today, I just wanted to stress having that relationship with your banker. So if you haven't spoken to your business banker, if you've never met them, now might be a really great time to go ahead and make that introduction with them. And, just go out for a cup of coffee or take them to lunch. I mean, COVID safe, but, a lot of us are ready to get out and talk to people in person again. So if you haven't done that already, reach out to your local bank. And even the big banks have personal bankers at the branches. So you want to make sure that you talk to those people because you never know how that's going to really impact your ability to get credit down the line. And you never know what kind of a connection that's going to lead into. Bankers know a lot of other people. They may be able to connect you with resources that you need to kind of get that business to the next phase. So out of the box accounting, we're talking about cash flow and building business relationships with bankers. You wouldn't necessarily correlate the two, but they relate because at the end of the day, it all impacts your money. So hopefully this was helpful, gave you some things to think about. I challenge you to have that conversation with your banker sometime in the next month, if possible, or 2 months if need to stretch it out. But it can be really helpful building that relationship ahead of time. Even if you just have a business idea, that can be a really great conversation to have with them as well, because they may be able to point you in the right direction for resources or give you some tips because of somebody else that they worked with that had a similar business. So having relationships with bankers in general, it can be really, really, really helpful in multitudes of ways. So reach out to your banker, talk to them, have that conversation because you never know how it's going to help you in the long run. And it definitely will help you if you ever get to the point, or if you're getting to the point where you're going to need some kind of working capital or loan funding. That is a really great way to kind of get that door open and start walking through. So hopefully this is helpful. Day 3 of Out of the Box Accounting. And if you need any help or if you want to set up a consult with us, please feel free to visit our website. It's in the comments. And if you found this helpful, make sure you share and comment and and invite people to our pages to be able to keep up with our other videos. So thank you for watching, and I will talk to you again soon. Thanks. Bye.